Hey everyone, Christopher Lynch here, Cross Country Mortgage, located in North Canton, Ohio. And today I want to talk to you guys about the new loan level pricing adjustments and in comparison to what you're seeing and hearing online and what the news is saying. I just want to let you know that this is actually something that has been going on as of right now for a few months. And so on the lending side of things, we've already adjusted to this. We've taken precautions and we've actually just started already helping our clients that have not even heard about it before they heard about it. And so we just wanted to take a few moments of your time today and just kind of walk you through it. So the biggest things here is I want you to know that the loan level price adjustments is actually going to be total pricing on the cost that you would be paying for cash to close numbers, so to speak, and what you're going to be paying if you choose to pay points to help buy down an interest rate. But I don't want you to believe, because this is not true, is that if you do have better credit than another person, is that you're going to be paying a higher rate. That is not true by any means. So if you are someone who has that 740 or higher credit score, it doesn't mean that you're going to be negatively impacted by these changes. And it doesn't mean that if you are someone who has a 620 to a 739 score, that you're going to get a better rate than someone who has that 740 score and higher. What it actually does mean is that if your credit score is lower than a 739, if your credit score is a 739 or lower, it does mean that you're going to be in a position to where there's going to be some price adjustments for you to help make you potentially a conventional buyer right now in the current market, compared to maybe possibly having to consider an FHA, USDA, or a VA loan. Now, if you still have to go with one of those loan products, totally fine. And between myself and your agents, we will help you make sure that you still are a successful, happy home buyer. But what I will say is that maybe a conventional loan option is the route that we explore, because previously, in order to be able to do that, especially if that credit score was below a 680, you would have to be putting 20% or more down. Now, because of the price adjustments on the costs and your upfront fees into a loan, you actually maybe not necessary to actually do that 20% or greater. Now, on the flip side of this, for our folks who have credit scores 740 or higher, this is where it comes into play, to where we really have to dive in and say, hey, is it worth putting down the 25% or more? Does it make sense to where you're only putting down 10 to 15%? Does it make sense to go this way over another way? And so regardless, I do think that it would be very wise of you and favorable to you to have a conversation with your agent and a local lender like myself to see how this actually really is going to impact you. I hope that you all can take advantage of our free credit review options this month and connect with me. We'll see what makes the most sense for you, put a plan of action together, and get you out there and ready to actually start looking for homes to make you a homeowner. Thank you so much for your time, and look forward to talking to you guys soon. Take care.